Hello, this is Mike Swanson. I run the website wallstreetwidow.com, and the odds are that you're watching this video update about what's going on in the markets because you got an email from me telling you that it's up, and it's part of a blog post that I put on my website. Now, if you're not on that free email list, you need to get on it to get all my future updates. There's a link below this video to do just that. We're in an interesting time in the markets. There's been what seems to be volatility, some up and down action in the markets. On Tuesday, we actually saw the worst daily drop in the S&P 500 in the past 30 days. We've also saw gold fall last week and retest its March low successfully to put on what now appears to be a confirmed double bottom. What I want to talk about in this video is navigating a market situation that's much different than what we have seen in the past several months. You know, since March or April, May of 2020 to just recently, the stock market was going up basically almost at a 45-degree angle, with the exception of a little speed bump that came last Labor Day when the S&P dipped about 10% in February. In March and April, we saw the NASDAQ also have a larger pullback, with many of the Fed stocks to peak out, and they've been declining slowly ever since then, even though the S&P 500 itself has been going up. This is often a warning sign in the markets that a topping process is being put in, or that a correction is coming. But that sort of trend of declining internals for negative divergence in the market really has been going on since June. And there have been times in the past where it's gone on for months. And that could easily be the case again. We could easily see this sort of situation carry out throughout the entire rest of the year. So, but there's one real big point I want to make, and that is when you look at the daily swings in the market, even down days, they don't necessarily mean a whole lot because the market is not in a strong downtrend. At the same time, the up days are not as meaningful now as they were 2 months ago, because the market itself isn't in a 45-degree angle uptrend. Something different is going to happen. The momentum has faded. It's slower. And in some ways, people trading the market, this is the main point I want to make, people trading the market in a situation like this, it becomes harder to trade because it becomes easy to churn your money over, because you can see a down day and sell on that down day, or try to short stocks even on that down day, only to see the market go back up over the next couple of days. Or do the opposite. You can see the market go up one day, buy, and then just see it come right back down. Because what's going on is it's not a strong uptrend, it's not a strong downtrend, it's more sideways. And a lot of sectors are now going sideways. And sideways market trends are very tricky because they become very easy to churn your money over in. And this has been the case in particular with the price of gold. It can hold a key lesson in regards to this. Let me show you a chart of the price of gold. And we're going to talk about how to deal with this situation. So here's the price of gold, a 20-year chart of it. And you can see it peaked, it had a huge run up really from 2019 with a pause in the middle of that year, and then another move up to 2100, at which time it peaked around August last year, and it recently dipped around 1725 or so. But the overall trend since from August to now if you take out, a dip from 1900 to 1725 and then back up, well, the overall trend is actually sideways. That's what's really going on in the price of gold. So when gold declines and people go into a panic calling crash, they have been wrong because the trend's sideways. It's not a bear market trend. At the same time, it's easy to have been tricked by the rallies back up because they've all faded because the overall trend is sideways. So this has created a very difficult environment since August for trying to momentum trade gold one direction or the other, because the moves have been short-lived and they've all happened within the context of a sideways trend. Now, eventually that sideways trend will be broken, I believe, to the upside, but a definitive break, you need to see 1825 taken out and then the high above that around 1900 to start another leg up that could last 12 months or even 2 or 3 years. And if you look back at this 20-year chart, you can see how there have been many periods of long sideways action. I mean, my goodness, from 2016 to really 2019 was sideways. You can see how 1400 was resistance, and I think it was right below 1200 had been support for several years. And then once 1400 was decisively taken out in 2019, then a $700 point move took place over about 2 years. But now we're in a sideways trend. It will end eventually in those 200-day Bollinger Bands. It's the pink line on the chart. They are in the process of coming together, and they may make it below 10 before the real breakout happens. That's what's happened in the past. So how do you deal with a situation like that? I own gold. I own mining stocks. I have them allocated with a portion of my retirement fund and my main account, which is much larger. But I'm not jumping in and out of it because it's so hard to do that. It's so hard to time the sideways trends. And if you try to do so, you end up churning your money over. And I know that from experience because that's how I tried to trade in and out of gold from 2002 to really 2008. I tried to put 100% of my money long in mining stocks at any one time and sell out when it looked like a top was put in for a short-term pullback and then buy back again. Well, it's very stressful to do that. It's about impossible to do it right every single time. And even though I made money during those years, when I look back, I found that if I just allocated 20% of my money into gold and mining stocks 2002 and held, I would have made more money than I would have had done from all that jumping in and out of trading, and had a lot much less stress doing that. So that's one of the main money management techniques I now use to manage my money. Gold, mining stocks, not the only thing I own. I own REITs, I own energy stocks, I own some stuff in foreign markets, I own commodities. And now I actually have a small portion of my account where I'm shorting stocks inside the NASDAQ, inside the SP 500, inside the ARK ETF that are lagging the market averages and are really in bear markets, despite the fact that the US stock market is not in a bear market. But I'm doing this video Wednesday. I'm going to make a post about it Thursday. On Friday, I plan on doing a very long blog post that will explain in great detail the money management system that I use to not try to exactly time the market, jump in and out, but it has a built-in method to do a small amount of selling on rallies and a small amount of buying on dips. So that's, I think, the easiest way to navigate a sideways trend is this money management system. So you'll be able to find out all about it Friday in a lengthy blog post, video, even a PDF file. This is the most important factor when it comes to long-term trading or investment success. It is having a money management system. It's not picking out the best stocks or understanding even how to read charts. It's having a solid money management system and being able to use it. I'm going to ignore the phone in the background. So you'll get that Friday. And what I've said about gold, I believe is becoming a factor now in the S&P 500. Look, we had a crash, as you can see in this chart, last year in 2020, and then a massive rally. And now it appears the momentum of that rally is starting to stall out. And then that does not mean the market's going to crash again, but most likely go through a very long sideways period. And this chart just goes back to September 2017. And you can see just on this chart, for much of 2018, the market went sideways. For much of 2019, the market went sideways. Sideways markets happen all the time. In fact, more often than not, the market is actually going sideways and not crashing or not having this massive 45-degree angle rally. Really, it's something like 3/4 of the time, historically, markets trend sideways, not as we've seen this straight up thing. So I think that's what we're really headed for, and why the internals of the market are starting to fade, because I think that's part of that process. And you see this in this chart, which I did a blog post about again yesterday, and I started to point out in June. This is the percentage of stocks trading on the New York Stock Exchange below their 200-day moving average. It has been falling. In fact, this indicator made a new low on Tuesday. This means that there are more stocks going up and down inside the U.S. stock market. And this is why I'm doing just a small amount of shorting, because this is part of the underlying trend taking place. So a lot of stuff here, but the main thing I just want you to take away is we are in a trading environment now, which is very easy for people to churn over their money if they're trying to time everything perfectly and pick tops and bottoms, because you get fooled. You see something fall, it's easy to think this is the start of a giant drop. You see things rally, you think, oh, it's going back to a 45-degree angle now, rally, but it isn't. And then you get tricked buying into tops or selling on bottoms or shorting on bottoms, and turns into a big mess. And it's just so easy for that to happen because, the news focuses on short-term moves. It's what you see when you look at what's happening today. It's short term, but you got to always put these short-term moves in context with the monthly trend, which we see momentum fading. We see gold sideways. We see the U.S. stock market easily in a situation where it can also end up becoming a sideways trend in the months to come. So this is a good video outlook update of what I think is going on, what I think is the most important thing to be aware about right now. And stay tuned. It won't be a new video. It's going to be an old video that people have seen in private on YouTube that I'll be putting up as part of my money management lessons on Friday. That, frankly, is the most important information I have ever put together. Some people have known about it for the past several years as I've shared it privately with people, but on Friday it's going public and you'll be able to see it if you haven't ever before. It is the most important thing I've ever put out when it comes to being successful in the stock market, whether that's trading or investing. So I hope you take the time to go through it because it's there for you, or it will be there for you. So all that said, hit like on this YouTube video. And if this is the first time you've ever seen me on YouTube, click the subscribe button and then click the bell next to it. And that way, YouTube will send you an alert the next time I have a video up on YouTube instantly. I'll be talking with you later.